For more accounting information and accounting courses, visit our website at accountinginstruction.info. In this presentation, we will compare the payroll summary report to the income statement, taking a look at the expense accounts related to payroll. We will do this within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. In order to open the open windows, we go to the view drop-down and select the open windows list. We're going to first open the income statement by going to the reports drop-down. We're going to go to company and financial and open up the profit and loss or income statement report. Changing the date range from 01/01/18 to 12/31/18, January through December, the year we are working on, 2018. I've just increased the font size a little bit so it'll be a bit easier to see. Note that we have broken out from the default settings of having all payroll grouped into payroll expenses to breaking them out between employee benefits, payroll expenses, and payroll tax expense. As we do this, this may help us to fill out some reports, including the 941s and the W-2s and W-3, match everything up, tie everything up as we prepare year-end tax returns. But whatever we group these in as, we're going to have to go through there and we can just double check them, sort these numbers out so that we can agree them to the year-end documentations that we need to agree them to. Here, let's take a look at the report, the payroll summary report now. By going to the reports drop-down, we're going to go to the employee and payroll, take a look at the summary payroll report, payroll summary report, payroll summary. And then we'll change the date range once again to 01/01/18 to 12/31/18. This report giving us our summary. We've got January through December 2018, similar to giving us the gross payment minus what would be deducted from it, similar to a paycheck stub in a vertical type fashion for our two employees, Anthony, Judy, and then the total. We here are concerned with the total. Note that this report is being grouped by basically payroll items as we would see them on the paycheck. And on the profit and loss, it will be, of course, grouped in terms of accounts, in this case, expense accounts. So within this report, we see, I've just increased the font size a bit. So we've got the salary, we've got the hourly pay, we've got the hourly sick, the overtime, the bonus, that gives us the $332, $33, $34. If we compare that to the profit and loss, if we go back to the profit and loss, we're going to say that's going to be the payroll expenses. So notice that this ties out very nicely now that we've adjusted these items, broken out the payroll expense side, and then broken out the benefits and the payroll taxes. Going back to the payroll summary, we then have the deductions from gross pay. Remember, these are kind of the deductions that will affect the tax calculation. So that's the 401k, employer, and the vision in our case. And then we have the taxes. These are going to be coming out. Remember, these are going to be the employee taxes. So they're included in payroll expense because they're really part of gross pay, even though for the net check, they will be coming out. So we got federal withholdings, Medicare, Social Security, California withholding, disability, and medical employment add additional tax. Then we have the deductions from net pay. These were not affecting taxes, but still being something that we're taking out before we give the net check, dental insurance, union, and garnishment. And that gives the net check. So remember that when we compare this report to what's on the income statement, it really should tie out to the gross check in terms of the expenses for the employee. This other stuff we took out of the gross check, but we're paying it still on behalf of the employee, just not to the employee. We're paying it on behalf of the employee to mainly the government and whoever else we have to pay. Then down here, we have the employee taxes and contributions. These are the employer items, the things that we have to pay over and above the gross pay. So these are not part of the gross pay, they're included over and above, and they include the things like the federal unemployment FUTA, our portion, employer portion, Medicare, Social Security, the SUTA, state unemployment, our portion, the matching portion of the 401k, the group term life insurance that we're paying for the company side, the health insurance that this company paid, the HSA this company paid, health savings account, the S corporation medical taxes, and the employer training tax. That's going to be the $27,737.56. And if we go back to our income statement and we add up these two items, the benefits that were the items that we changed for those benefits that were employer portion, that being the $11,235 and the $16,502, that'll give us the $27,737. So that $27,737 back to the payroll summary form is the $27,737.56. So you can see that breaking this out, we can break out our income accounts by changing those items to line up more closely to these reports, which may help us to be more confident in the reportings at the end of the year. Going back to the profit and loss report, if we leave it in the default, then all of this would be grouped in together as payroll expense. And if we wanted to have some assurity as to what has been broken out, we'd have to do just some more calculations outside of Excel possibly to break those items out and give us some more assurance that they're reported properly. For example, if we want to tie these out to the W-2s and the W-3s and the 941s, we might have to break these out in different ways just to make sure that everything ties out properly. Also, if we want to tie them out to what we're going to report on tax filings at the end of the year, we might have to break these out. Oftentimes, it's nice to break out the payroll taxes, which kind of properly should be broken out most of the time to show that difference between what's going to be the employer taxes as opposed to the employee income. For more accounting information and accounting courses, visit our website at accountinginstruction.info.